If you thought that 2020 was a crazy year in the crypto markets, then you are in for a big surprise. 2021 will bring with it a wave of a different kind, one with a traditional finance slant. I am, of course, talking about the year of the crypto company IPO. In this video, I'm going to give you exactly what you need to know about these potential ICOs. Which companies are doing them, when, whether to invest, and what it means for the markets. So, don't go anywhere. Before we proceed, some legalese, if you please. Everything you say can and will be used against you. Oh, not that one. That's the wrong one. Here we are. I am no financial advisor, and everything in this video should only be considered educational. Please consult your advisor before making investment decisions. Right, enough of that. I would now like to welcome all of those new to the channel. My name is Guy, and over here at the Bureau, nothing crypto is off the table. News, reviews, market overviews, you name it. So, if this is the type of content that you'd like to avail yourself of, then hammer that subscribe button. Ping that notification bell as well to make sure that you never skip a market beat. And finally, as always, you have all these timestamps over here. Skip around if you're pressed for time, although I do encourage you to watch as much as you can. Okay, let's get this initial offering going. So, what is it with all this IPO stuff anyway? Surely we should be talking about ICOs, STOs, IEOs, and DEX offerings. This is crypto after all. Well, that's because crypto companies are now starting to take things to the next level in their fundraising efforts. They're considering the traditional route of an initial public offering, or IPO. For example, you'll no doubt have heard the news that your most favorite crypto exchange is intending to launch an IPO next year. Yep, about 2 weeks ago, Coinbase submitted a draft registration statement on Form S1 with the Securities and Exchange Commission. This is the first step when it comes to a company launching its IPO. It was, of course, not a surprise given how much the exchange has grown over the past year. However, it seems as if the timing was pretty well thought out, happening at about the same time that Bitcoin is breaking all-time highs. There's no doubt a hell of a lot of excitement around crypto in the traditional financial sector. This is a point that I raised in my video about the institutional adoption of crypto. However, having the opportunity to own shares in a business that is at the coalface of the crypto markets is not something that these investors would like to pass up. And despite what you may think of Coinbase, there is a reason as to why these shares could be in high demand. It all comes down to the profitability of the exchange. Now, while you may find those exchange fees that you have to pay egregious, they sure do help to boost Coinbase's bottom line. As long as there is volume in the crypto markets, Coinbase is banking. Be it buying or selling pressure, the fees roll in. The only time they're not making money is when the market volatility takes down their servers, something that we all know is extremely rare. Now, as mentioned, the timing is not a coincidence. The main goal of an IPO is to generate as much funding for the company in question as possible. They are trying to maximize their valuation, and this therefore means launching at a time when there is a lot of excitement around the company and sector in question. So, for crypto, there is no time like the present. Okay, so that's all well and good. But what valuation could Coinbase command? And could it be an attractive diversification play from physically just holding crypto? Well, let's dive into that, shall we? In order to do this analysis, I've decided to lean on this research report by the chaps over at Messari. Seriously, folks, they have done some top-notch research. It's quite a technical equity valuation, but I'm sure you good people can handle it. So, in this report, they have run a couple of numbers in order to come to an estimate of what sort of valuation Coinbase could command in the IPO. They run this analysis with some pretty well-known financial metrics used to value companies. These are valuation multiples like price to sales. Let's start at the top, shall we? Firstly, you can pretty much be sure that the company is going to be more valuable than it was in its most recent fundraising round. That was back in October of 2018 when they raised $308 million in their Series E. As you can see from this table over here, that placed the post-money valuation of Coinbase at about $8 billion. Based on estimates of the revenue generated in 2018, that would imply a price-to-sales ratio of about 6.2 times. Now, what's important to note about this is that 2018 was the height of the crypto bear market. Remember, an exchange makes money on fees, and if people are not trading, they're not making any. So it's pretty impressive that Coinbase was able to make about $1.3 billion in revenue when most of the market was licking its wounds. And it's not just revenue. Estimates for profits in that year are at about $456 million, which means that they are a highly profitable unicorn startup. Most will know that high-growth startups don't tend to make a profit as they're mostly focused on growth. Heck, even after listing over a year ago and being in operation since 2009, Uber is still losing money. They only hope to be profitable by the end of 2021. Anyway, what this all means is that Coinbase is likely to command a pretty strong price-to-sales ratio when it does come to market. That Series E raise was over 2 years ago in a really tough market environment. So can you imagine what their numbers are likely to look like for 2020, one of the most groundbreaking years of them all? Two things that we know are likely to have increased include not only the revenue, but also the premium investors are willing to pay on that revenue, price to sales. Now, given that Coinbase is a private company, financial statements have not been released yet. However, the folks at Messari have built a financial model which they use to estimate the 2020 revenue. I can't go into the model in detail here as it's quite involved, but they basically break down each of the Coinbase business lines and try to back out most likely revenue. This is based on things like known user numbers, volume, and fees. I've linked to the full model below, by the way, in case you want to take a gander. Anywho, based on their model, they have estimated that the full year revenue of Coinbase for 2020 is $1.6 billion. Not an unrealistic number at all, especially given the year that we've had. Now that we have an estimate of revenue, we have to zero in on the most appropriate multiple that could be applied to the revenue. In traditional equity valuations, comparables are often used in order to come to this multiple. Of course, it's pretty hard to get granular details on these comparables, given that we have not had a great deal of crypto businesses like Coinbase listing on the open market. However, there is currently one example of a listed crypto exchange provider, and that is the BC Technology Group that's listed in Hong Kong. So, the Messari model used their financial statements to back out a likely multiple that can be applied to the Coinbase exchange business. A 3-year average of this ratio is 19.9 times. Of course, using just a singular company to come to a multiple is risky, so Messari also looked at some of the multiples that can be backed out from traditional finance companies. Companies like stock exchange operators and custodians, given that their business models are vaguely similar to Coinbase. Based on these companies over here, they came to an estimate of a price-to-sales ratio of 12.7 times for exchanges and 2 times for custodians. Throw an average on that and we get a price-to-sales ratio of about 12 times. So, therefore, an estimate for the range of Coinbase's valuation is between $32 billion, based on a multiple of 19.9, and $19 billion, based on a ratio of 12. Messari has further honed in on this by taking a probability-weighted valuation between the two ratios, and we come to our grand number of $28 billion. Crazy, right? Seems like those fees are doing pretty damn well for the exchange. Now, of course, this is just an estimate as it is a model. We'll have more clarity on the exact Coinbase financials when they release them prior to listing. I should also note that no one knows the exact multiple that it could command. 17 times is a bit on the high side if we were to compare it to some of the other tech unicorns that are currently listing. For example, Airbnb is looking for a valuation of $47 billion, which, based on 2019 revenues, is about 10 times. Of course, it's not profitable, and we all know that Airbnb is at a torrid time this year. I personally happen to think that the multiple could be even greater than 17 times. If Coinbase is profitable and runs the IPO at the same time with all the other excitement around the crypto markets, the valuation could be much higher. Indeed, there is actually a crypto futures market that has opened up for Coinbase shares. Not long after the announcement of the Coinbase IPO, the Maverick FTX exchange listed Coinbase share perpetuals. The price of each contract is basically the potential Coinbase market cap divided by 250 million. Currently, the contracts are trading for $250. This means that the implied market cap in the futures market is $62 billion. Talk about some hopium smoking. Now, you'll know as well as I do that the crypto markets can sometimes be irrational and push prices to unsustainable levels. I don't think that there is a chance Coinbase commands that valuation, even if the crypto markets do go crazy. But what this shows is that when Coinbase does eventually do its IPO, there are likely to be plenty of retail investors clamoring to buy in. And I happen to think that is only going to be the first of many. If Coinbase manages a successful IPO, then we're likely to see a flood of similar filings hitting the market, a cascade of crypto companies capitalizing on easy capital. This all then begs a very important question. What other companies could be considering? Well, I happen to have an idea of one. Bitmain has long had its sights on an IPO. Yes, the mining chip manufacturer first looked towards a Hong Kong IPO back in 2018. That, however, seemed to fall through as the application lapsed in March 2019. Not to be deterred, towards the end of last year, it was understood that Bitmain had secretly filed with the US Securities and Exchange Commission. This was in preparation for their US listing, which would have made them one of the largest Bitcoin mining farms and chip manufacturers to issue shares in the US. Things seemed to have been put on ice towards the end of last year when it was revealed that there was infighting and a management shakeup. Long story short, the two founders were both wrestling for control of the company. This was a bitter rivalry which actually saw one of the founders, Jihan Wu, try to engineer a coup from his co-founder, Mikri Zhan. Fast forward to December of 2020, and it was revealed that founders had come to an agreement that would see separate business lines stripped out. Essentially, the one founder is buying out the other, and they will be stripping those business lines that are not primary to the company, mining pools and cloud mining. What will be left is the main Bitmain ASIC mining chip manufacturer, which accounts for 90% of the revenues of the firm anyway. In the same news report that talked about this truce between the founders, it was also reported that the main shareholder had his sights on a US IPO before 2022. Of course, the valuation on this IPO is likely to be much lower than they were initially targeting last year for the full business, at $18 billion. The valuation is actually even less than the value Bitmain had in their previous funding rounds. So it's quite clear that Bitmain's numbers have been stretched. However, if Bitmain does come to list in the US, it will be another opportunity for a US investor to own shares in a company that owns a near monopoly on the Bitcoin mining chip supply. Now, there is, of course, a famous saying that goes, "In a gold rush, those that make money are those that sell shovels." So, Bitmain shares could give you the potential to diversify that crypto risk. However, I wouldn't get too excited right now, as the company is not profitable at the moment. Last year, they reported a $90 million loss. A relatively minor loss compared to the revenue they must pull in, but still not the best to go into an IPO with. Of course, that was at a time when Bitcoin was not nearly as exciting as it is now. We've also been through the halving this year, which means the demand for specialized and optimized ASIC mining chips is likely to have risen considerably. It will be interesting to see what numbers are eventually presented if and when they do file for that IPO. I'll be keeping my eyes open for that one in the new year. Now, while all this talk about crypto company IPOs is exciting, it does raise a very important question. Is it something that you should consider? Well, of course, that all depends on the price, but even then, I would be really careful about it. And this comes down to a very simple reason. IPOs, and especially those that are as hyped as Coinbase, generally have a lot of big investors ahead of you in the queue to buy those stocks. These guys have big accounts and get the first crack at that offering price. This offering price is generally always lower than the first day of trading. For example, in the case of Coinbase, the investment bank advising them on the IPO is none other than Goldman Sachs. Yep, the vampire squid has its blood funnel stuck into the money veins that are likely to be this IPO. You don't think that Goldman is likely to have a long list of institutional accounts that are dying to get their hands on some Coinbase shares? These folks will then get in right at the offer price and secure their allocation long before the shares hit the exchanges. They will then assess the retail frenzy on the first day of trading. If they think they can bank a tidy profit, they'll flip them on the open market and watch as the stock sinks. It's almost exactly comparable to whales dumping tokens on the crypto market the moment that they're listed on an exchange. There is a lot of precedent for this in the stock market, by the way. It happened on Facebook's first day of trading. The same happened with Uber last year and more recently with DoorDash and the Airbnb IPO. The first day, and sometimes weeks, of trading in overhyped stocks can be incredibly rocky. You won't get the deal that the investment bankers are giving their buddies over at the hedge funds and mutual funds. You are pretty far down the ladder on Wall Street. This is something that does concern me about the Coinbase listing in particular. There are likely to be a lot of crypto traders who will see this as their opportunity to own a bit of Coinbase. Now, as I pointed out, there is already a massive premium on the valuation as judged on the futures market on FTX. But it's not just your regular crypto altcoin gambler that's likely to jump into this IPO. You also have to consider the impact of the Robinhood army. Yup, millennial traders on Robinhood are likely to YOLO into this IPO quicker than you can say Nicola. All jokes aside though, this newer class of stock speculators have been responsible for pumping the price of numerous companies recently. Watch my video on crappy stocks if you want more info on that. That's in the top right. Anyway, the point I'm trying to get at is that the moment these Coinbase shares hit the market, the hype will be insane. Many of these retail investors will buy the shares on the first day, irrespective of price, only to see the hype wear off as the bankers and funds line their pockets. But this does not mean that you should not buy Coinbase shares. If history is anything to go by, once the hype dies down, fundamental valuation takes over and the price recovers in the bargain hunting stages. For example, you need look no further than that Facebook IPO, where it initially tanked on the first day of trading. It kept falling for over a month and eventually reached a level 50% off of the initial listing price. Of course, this presented an amazing bargain hunting opportunity for those that understood the true long-term potential of it. If you'd bought into Facebook after those initial lows, you would have 10x'd your investment by now. I know, not crypto returns, but still damn impressive for a stock. So, this is something that you need to bear in mind when that Coinbase listing date swings around. Know that in the lead up to that listing, the hype is going to be off the chain. The FOMO will be dialed up to 100 as the bankers try to drum up enthusiasm into the launch. But as long as you're able to remember what I've said here today, you are way more equipped to deal with this FOMO when it does arrive. That's as much as I have time for today, folks. I do have a few things to say in order to close this out, though. Firstly, I will say that I am excited about the Coinbase IPO, not because I'm dying to invest in it, but because of what it signifies. It's further proof that crypto is no longer a cypherpunk's wet dream. Gone were the days when an obscure exchange called Mt. Gox dominated a nascent market for this magic internet money. Next year, we will have a crypto exchange playing in the big boy sandbox of traditional equity markets. And, as I mentioned, Coinbase is only likely to be the first. There are a number of other exchanges, mining farms, chip manufacturers, and lending services that are eyeing the IPO, watching and waiting for their turn to take the market by storm. However, despite the excitement that these IPOs are likely to bring, it does not mean that they will be a good investment, at least not out of the gates. Unless you have a buddy who has a line into the Goldman Sachs syndication desk, you are unlikely to get in at the offer price. Don't let the hype around these IPOs cloud your judgment around fundamental value. There is wisdom in being calm and waiting to see how things play out. Let the other retail investors who've not done the sums be the proverbial IPO dump guinea pigs. In times like these, the rational investor has longevity. Of course, I'm no soothsayer. There is a possibility that the institutional investors don't want to touch a crypto exchange, that the Robinhood traders would rather pump bankrupt penny stocks than invest in Coinbase or a company like it. This could then present you with a decent opportunity to pick up a stock you view as undervalued. And then, if you do own some Coinbase shares, you won't be so hard done by those extortionate fees that you pay when trading. That's because some of those fees may come back in the way of dividends. That's all for today, folks. Got a dash. Now, I've done a lot of talking, and I'm ready to start listening. So, what do you think of the Coinbase IPO? Any thoughts on other companies that could list? Use those comments below. Oh, and while you're down there, you have to check out my social media page. This basically has the links to all those places you can follow me for in-depth and regular updates, stuff you don't want to miss. So yes, check that out. And finally, folks, it's been a pleasure. If you found this video helpful, then help me help you by turning that like button blue. Also, don't forget to subscribe to keep getting this content time after time. My next video is already being cooked up in the Coin Bureau kitchen. Oh, and it smells good.